Welcome to TradeTheNBA.com. This is John. This report is for the 19th of July. Well, we saw that battle up at the 38%, and then that attracted plenty of sell attention, which caused a follow-through pretty quick. But we're still magenta above yellow, and everything from a DOC standpoint, all bullish, shakeout all bullish. So it was an opportunity, capture dip, turnaround has already begun, and we're right back where we started before. Again, it becomes pretty simple with that 38% at 38.93. Of that definitely pushes more towards the long bias. Below it, certainly we follow the readings, and that's been pretty easy when it came to the 50K and all that. From a NASDAQ standpoint, identical. Not quite as strong from its DOC reading, but the overall long-term red and mid-term buyers of green here, both pointing upward, and so that was stronger. We just didn't get that orange dip. That's usually where you get that momentum push, when you get that strong dive of orange DOC going below. It just represents the dramatic ratio flip, and usually, really that's where we get the strongest, spikes. Like, you can come back to some of these moves, and you get your much more committed force, as we like to say. Euro, massive increase. Now, of course, this is interesting on the heels of Gazprom declaring force majeure and that they are going to halt oil going into Germany. Obviously, this has a lot of crazy implications for the months ahead, because what will Germany do? Obviously, they're not short of LNG at this particular stage, but that will change rather quickly, and that will put pressure on other markets, because they're going to have to buy it from somewhere, or they're going to have to flip to other oil products to generate the power and meet the commercial needs that they have. And that is certainly going to pressure price, which is only going to, and if they choose not to, then that's a horrible scenario for the rest of the EU. Not to mention for price inflation, because if you have a limited supply of things, there's going to be more money chasing the limited number of goods. But the euro is rallying hard at this particular stage, and we saw that from the central bank move when it dipped below 1. So this is one of those relief rallies. People are just covering their short, and we talked about it. The return back up to the 0 would be right around the 135 range, which still puts it in danger. Anything below, as I was saying, that literally right below that 103.5 range is crisis mode. So they're definitely going to want to try and get that back above there. We'll see how it fares. Maybe they believe that there's going to be extraordinary measures from the EU to safeguard things. We'll see. From a gold standpoint, not a whole lot of change there. Again, I think that gold's being relatively depressed in general. All these readings at this particular stage look like a minor oversold bounce. This particular stage, probably back up to the 23%. But it's got some more time before that's going to be ready for anything. The dip in oil below 90 reversed very quickly on that news coming from Germany, and should continue to stay elevated, but just under 100. If it gets back up over the 100 benchmark and starts rising quickly, then we'll know that the West is void of anything as far as answers from the Germany issue, and whether it's going to draw excessive resources, causing prices to remain elevated. So we'll keep an eye out for that one. And certainly from a Treasury standpoint, we would expect yields to continue to rise, meaning TLT would continue to drop here as the rates increase. We had a lot of popularity to it. That becomes a question then for the market, whether or not treasuries are going to start to see a disproportionate yield of the resources coming in to that safety. And that becomes a real interesting prospect going forward. It's been a long time since there's been a real competitive shift towards treasuries versus stocks, and whether or not people believe that stocks are going to continue to trade either sideways or lower. Sideways, not so bad. You'll go ahead and stay in stocks and, get your return from that standpoint. But if there's a negative bias associated with holding on to stocks, then I think that we could definitely see a switch towards treasuries, which would be problematic for the market to some degree. Thought I'd show the Bitcoin daily and why I've been talking about how weak in general it is, even though it was in a bullish configuration. Just that move back up to the 23% 50%. It's right around 23K. It's trying to make a couple advances towards it. Still looking very decent from a shakeout now, but we'll look to see if any turnaround at this particular stage would lead to new lows. So it's got to hold on at that particular stage or it's going to get unpleasant for it. And again, beautiful from an ETH standpoint. The fill, positive extreme, starting right here. We'll actually read this one right there. And you can see that line goes just above the 0% that takes place right here. So nice run up, full fill. And that's exactly what happened on the market. We had that same kind of run up. In fact, I think that we still have a little bit more from a 50K standpoint to fill back in all the way down to the 37.97 range. So around 3,800. Done pretty well given where we are. So no objection to that. But you can see it started off with that big thing. First thing I posted in the morning was positive extreme markers. There were a couple of significant ones with their bigger bars. Could have even marked this one up here when it took place, but I'd already done that. And sure enough, we started to get the first fill backs. And you'll notice down here that 38.63, which was that old positive extreme from way back, that it continued to be relevant. And then boom, it traded back and forth. It seemed like it was going to be boring, not going anywhere, but you just have to stick with those when those signals come and take them as they do, because when you get this kind of breakdown, it all pays off. And then some. So we broke through the lower 63 range, then fought right back up to it right now. And so that's all this is clearing back up to that old algorithm. Whether it's able to sustain above that, we'll see. It should fade below it at this particular stage with the magenta below. And we'll see if we get a return spike and then it continues. But there was a bunch of positive extremes from this, so the dip should come all the way down to the 51 range. There you have it, long and the short of it, the complications of the world situation and why this is going to be a summer of some good moves. As always, though, trade well. Look for me in Skype chat. Talk to you later.